Of my 200 columns in the Financial Times, the one that makes people the angriest is the one where I point out the academic evidence which shows that fund managers and therefore pension fund managers are very poor at beating any benchmark that they set themselves. Now, there's a reason for this, the anger as well as why they're poor at beating that benchmark. The reason for the anger is it actually came from the fund managers and the fund management industry because they just hate it being pointed out. And I say to them, don't shoot the messenger. I'm just the columnist in the Financial Times, and now I'm going to write about it in my books as well, I told them at the time. And this is going back some 20 odd years. Uh, b- uh, Blame yourselves. The academic research was based upon the results you guys produce yourself, and they didn't like it. So why did they underperform so much? Well, I'm going to let you into a really big secret. The way most retail funds work, if not all of them, is they select a benchmark and then they look at the constituent elements of that benchmark. And then, rather like one of those old fashioned graphic equalizers or volume knobs, they decrease some of the holdings, increase others. And their goal is by doing so, maybe changing just one or two tiny little things, they could beat the benchmark. It's a incredibly lazy way of doing things. But not only that, think about what the constituent elements of that benchmark are. They might be rubbish companies. They might not be ones you actually even want. They might be held in such small quantities that the ones you actually do want, maybe you wanted an Nvidia, is held in next to no quantity at all. You see, the problem is most private investors think that pension fund managers are incredibly clever individuals. Well, I can tell you I've got more qualifications than any of them. And if that sounds arrogant, well, it's their problem, not mine. And they're not. They're not that bright. They're not that clever. Because the cleverest person at investing, actually, he left college at about 18 or 20, was Warren Buffett. And as he rightly says, you don't need to be that clever to invest. In fact, doing simple things more often will make you more money, and he's proof of it. So whilst they bamboozle you with lots of formulae and calculations, it ain't going to help. So what is going to help? Well, I suggest you start getting a grip on your own pension and do something about it. So alpeshpatel.com/links. That's where you want to go. Thank you.